Hey guys, Barry Page with Legacy Money. Thank you for joining me today. We've got a great video. I'm really excited to cover how you can leave a legacy with life insurance. My mission is simple, to help you protect your family and keep more of your money. Here's what I'll be covering. We're going to talk about legacy and stewardship. Specifically, I want to talk to you about why you do the things you do and what is really important to you, and how you can optimize your financial plan to minimize wealth transfers and maximize your benefits tax-free. I'll wrap things up with a simple and practical way to guarantee that what you want to happen will happen. The goal is to help you live more, give more, and leave more. So let's get started. I'd like to ask you some tough questions about things that may be uncomfortable to talk about. Why are you doing what you do? Why are you trying to get ahead? Working hard, saving money, and sacrificing your time. Are you putting off taking action on things that you should be doing? Are you putting off taking action on your goals and dreams? Why will you change? What would make you change? I want this video to be a reminder to you, a call to action to do the things you need to do now. Now, you will likely need other professionals, assets, and your time to accomplish your financial goals. I want to ask you to think about your most treasured assets. We have financial assets, and we have our time and our health. Time, once it passes, is gone forever. Our health can change at any time. So time is short. We have to realize the urgency in doing the things that we should do. Have you planned your estate? What will happen to your belongings when you're gone? We all know we should have a will, perhaps even a trust. But what else? One of the first steps in planning is to take ownership. We have to accept responsibility for where we are. We have to start with why. And we have to consider where we want to be in the future and what we want to happen. To take it further, we have to think like a business owner, like a banker. We have to underwrite our finances. We have to analyze our decisions, and we have to assume the risk, the consequences of our actions. In your financial world, are you aware how your money flows? Where do you put your hard-earned income to use? How much of your money stays in your system? Does it only flow out, or does it come back to you in the form of payments or profits? Like a bank. Do you have a method or strategy to keep the money in the family? Now let's consider our gifts. We have the gift of life, the gift of health, the gift of the opportunity to work, and hopefully the gift of money. Maybe you have been or will be left an inheritance. Maybe you've been blessed with financial gifts. To be a good steward of these gifts, we must put them to work, just like the financial institutions do. The parables are a good example of this. From Matthew 25. So you ought to have deposited my money with the bankers, and at my coming I would have received back my own with interest. So take the talent from him and give it to him who has 10 talents. For to everyone who has, more will be given, and he will have abundance. But from him who does not have, even what he has will be taken away. That's from Matthew 25, 27 through 29. Money is a tool. We can use it for good or for evil, or we can let it sit idle. So where you store your money is important. The storehouses of our wealth are usually the financial institutions, the banks. We trust them to watch over our capital. But are they all the same? Most people store their money in one of these three or maybe all of these places. the bank, the stock market, their home or property. What are the goals for your money while it's there and after you're gone? When storing our money with the bank, typically the goal is liquidity, access to capital. The downside may be a low return, but we feel that our money is safe. But along with storing our capital, there's usually some stipulations, maybe fees or interest. Other than convenience, that's really about it. There are no tax advantages for storing our money in the bank. With a stock market, we're typically looking for returns. But along with this potential for return is risk. And depending on whether or not we use another intermediary, for example, an IRS qualified plan, there may be tax advantages. And of course, with property, we can feel good about ownership and having a place to live. Other than that, our equity is in the property, unless we can qualify for another loan. There are usually some tax advantages depending on title and ownership. With these common accounts, there are risk and tax consequences. You also have maintenance, interest, and fees. Looking at alternatives to these accounts, people hire accountants, lawyers, and consultants to tell them where to store their money. One thing that is common with most all assets is that we protect it with insurance. But all insurance doesn't work the same way. When protecting assets, people own property and casualty insurance, and many times liability insurance to protect them in the event of a lawsuit. But the use of the insurance is singular, just like the asset that it is protecting. That's why I'm an advocate of life insurance. Life insurance provides many benefits. It protects our assets, our income, and our life. Permanent life insurance is an asset that provides multiple uses, but it also requires responsibility. Let me explain. You have to pay for life insurance in the form of premiums. Nobody forces you to do that. So why would you? People own life insurance because of love. They love someone or something enough that they want to make sure that when they're gone, that it's provided for. They want to make sure that they're protected from financial loss. On the other hand, banks require you to have insurance before they'll loan you money to buy property or a vehicle. Think about that for a moment. Who is the insurance really protecting? With life insurance, the company sets forth the terms of the contract, and we can own the contract. We put our trust in the claims paying ability of the insurer. Life insurance companies are highly regulated, and they must have reserves to pay their claims. They collect premiums, and they hold back a portion to pay expenses and claims. Some companies are stock, and some companies are mutual. Stock companies are owned by stockholders, and they may pay a dividend to the stockholders. Mutual companies are owned by policy owners, and they may participate in the profits of the company via dividends. The companies we work with have paid dividends consistently for over a century, every single year. Though these dividends are not guaranteed, that's a pretty good track record. Life insurance companies are trustees. We entrust them to manage the affairs of the company. They have to put your money to work in order to provide the benefits that you want. Mortgages are relatively safe for a bank because they have the house or property as collateral. Policy loans are very safe for the insurance companies because they have the death benefit as the collateral. Policy owners have access to the cash value in the policy via the terms set forth in the contract. Typically, there is no further underwriting once a policy is in force. And the owner has access to the cash value via their stewardship of the policy. Permanent dividend-paying whole life insurance can be used as a private financial system for banking. This method of using a life insurance policy provides a simplistic way to optimize your benefits. Life insurance provides protection from risk and loss. It provides a facility for savings and growth over time. It provides financing options for cash flow, expenses, and opportunities. And ultimately, it provides a death benefit, a way to simplify your estate, not found in other financial products. You can transfer all of your earnings capacity to the next generation with minimal wealth transfers. Again, I encourage you to think about how you're spending your time, your talents, and your treasures. Take action on your goals and dreams now. And if I can help, just let me know. Please leave your questions and comments below. And if you haven't already, I'd really appreciate it if you subscribed and hit the little bell so you'll be reminded when I have new videos. And if you like this video, give me a thumbs up. Thank you for joining me today. I'll see you in the next video.